This is the Savvy Investor radio show and podcast with Mike Kinnett and Ryan Herbert of ProStatus Financial, now celebrating 20 years helping families build successful retirements and lasting family legacies. Mike is a financial planner and estate planning attorney with a master's degree in tax and 4-time Amazon best-selling author. Ryan is a 5-star wealth management award winner and top-ranked financial advisor by Forbes. Now, the Savvy Investor radio show and podcast.
It's summertime. You can go on vacation, but your retirement plan should not. We're going to talk about that today and a mid-year financial checkup as we get closer to retirement. And you guys at ProStatus, you see this all the time. We're getting close to retirement. There's these vacations, and we kind of tend to take our eye off the ball. Normally, you think, well, I'll just put it off to the fall, but you say that a mid-year financial checkup, and it's what we're going to talk about here. I'm going to run down some of the bullet points that you have written down for me. You say that a mid-year financial checkup is a great thing to have because, again, you're in the middle of the year, and that's a great time to do that. So let's go through some of these, and I want to hold, arguably one of the most important ones, which is tax loss harvesting. Let's hold that one for the next couple of minutes coming up here, but let's tackle these first in a bullet point type of fashion, Ryan. And here's what you have for us. Reevaluate retirement contributions. The older we get, maybe when we were younger, we couldn't, but now we can. That's also a big thing to do is to catch up as best you can.
I mean, the biggest thing that you want to do when you're looking at your retirement contributions, whether you're putting money into a TSP, a 401k, a 403b, a 457, even, really those accounts there, you want to make sure that at a bare minimum, that you're contributing enough into that plan to get 100% of whatever the match your employer is giving you, because you don't want to give up that free money. But then more importantly, once you're over age 50 and you're 55 and you're getting close to retirement, you want to try to max out your retirement contribution. Put the maximum contribution in those 401ks, those TSPs, those 403bs, even your IRAs and Roth IRAs, because you might have gotten a raise at some point during the year. You want to make sure that you're raising your contribution amount, so that way you're hitting that maximum amount and getting the most amount you possibly can for your retirement. I think that's a pretty big step, is you always want to make sure you're reviewing that.
And those are great reminders, because again, we this stuff happens to us and we kind of put it off. And again, great reminders here for those mid-year financial checkups, as what we're talking about right now. Second here on the list is review current asset allocations. This has got to be a pretty big one here, because what do I sell? What do I get rid of if it's not doing me any good anymore?
Yeah, it's one of those things that it tends to be like the Ronco rotisserie oven. You set it and forget it. I remember those infomercials back from when I was a child. When you stay home from sick, you'd be watching The Price is Right, and then the Ronco commercial will come on. But you always want to double check your asset allocation, not so much from the perspective of, I'm a 60% equity, 40% fixed income, 80%, 20%, whatever your percentages are. But you want to look at the underlying holdings and make sure that you're not too heavily invested in one area. And, a great example of that would be the tech sector. The tech sector this year has just gone absolutely gangbusters because of NVIDIA stock. NVIDIA stock did insane throughout the year, and then they did their split. But you want to review those allocations to make sure that you're not too heavily weighted in one area of the market versus another area of the market. Because if you have that exposure in the tech sector, where it has now become 40% of your stock allocation, all of a sudden that one area takes a hit in the market, and you're having detrimental impacts on your portfolio, on your retirement. So you always want to make sure that you're reviewing the asset allocation, making sure you're in balance for how aggressive you should be, but then making sure you're not too heavily invested in one area versus the other. And that's one of the things that we look at when people come into our offices. We're looking at how aggressive you're saying that you are, how aggressive you actually are, but then looking at the underlying holdings and showing you, well, yes, you are a conservative investor. If you look at it from I have 40% of my money in equities, but all of your equities are in one area of the market. So you're actually a lot more risky than you thought you were.
Again, we're going over a mid-year financial checkup and why it's important to do that. In just a couple of minutes here, Ryan's going to give you the opportunity to get your very own mid-year financial checkup. So stay with us. Next one here on the list, and we have tax loss harvesting coming up, but that's in the
that's a whole other conversation in and of itself.
And we're going to dedicate the appropriate time for that. The final one here that you have on the list for us, and this goes on, but I think this kind of just wraps everything up in a nice bow, and it's something that many financial advisors and companies and things like that don't do it, and that is estate planning. Mike Kinnett is is an estate planning attorney. How important is a review of your estate plan? We know, but we want to hear from you.
I mean, you want to review it on a regular basis because life changes, situation changes. Unfortunately, before I came in here to record, I got an email from one of my investment clients who was, hey, Ryan, I want to come in and schedule a review. I also want to go talk about my estate plan. I know we did, we updated our wills, our powers of attorney, our advanced care directives before, but, unfortunately, one of his daughters unexpectedly passed away. So now we need to go back and update all that. So that way that it doesn't cause a headache in the future for him or his wife or the rest of his kids. So you always want to update that. I can't tell you how many times I have people come into my office who've been divorced for 5 or 10 years and they've gotten remarried. And then when we sit down, we're looking at their wills and their powers of attorney. Everything still goes to 100% of the money goes to the ex-wife, or the ex-wife would still be in charge.
That's a bad situation.
Yeah, it happens way more often than you think. So, you want to review your estate plan. Kind of part and parcel to that is you want to review the beneficiaries on all your accounts and make sure everything's proper, because, nothing would be worse than thinking you have everything all set up for your kids or your significant other, and then you pass away and you're leaving them a nightmare of a headache in dealing with things. And if you are feeling like maybe my estate plan is not up to date where it should be, if you feel like my advisor is not giving me that attention that I think I need, they're not meeting with me often enough, they're not reviewing my allocation to make sure I'm not taking on too much risk, I encourage you to click the link in the description below and schedule your complimentary consultation to sit down with Mike, myself, and our team here at ProStatus, where we're going to talk about your income and retirement. We're going to show you where your income's coming from. If you're over age 55 and thinking about retirement, or you're even in retirement, click that link to schedule your appointment, and we'll talk about income. We'll talk about taxes. We'll talk about your estate plan. Make sure everything is up to date and working the best it can for you. So click that link to schedule your complimentary consultation, and don't forget to subscribe to our YouTube channel.
Talking about a mid-year financial checkup. We've covered reevaluating your retirement contributions, review current asset allocations, and review your estate plan. So what's next? You know it. But this, is this the big one that a lot of people forget? And that's taxes, what you call tax loss harvesting?
Well, tax loss harvesting is a pretty big thing. It's something that you should look at midway through the year, and then once again, kind of towards the end of the year. And that's really why, our process here at ProStatus, our process here is to meet with our clients 2 to 3 times a year. We're meeting the first part of the year to talk about taxes and to physically prepare the tax return. But then we meet again right around this time, and we talk a little bit further about, all right, now here's what happened last year in taxes, and here's the plan we talked about with your taxes for this current year. So now's the time we got to start taking steps to look at it. But then once again, we go out to October, November, and we're meeting with our clients again to say, all right, here's everything that's happened throughout the year. What else can we do for tax purposes? So, tax loss harvesting, that is really looking at some of the losers inside of your investment accounts, your non-IRA accounts, looking at those stocks, those bonds, those mutual funds, whatever is in there that may have been experiencing losses or haven't been performing as well as the rest of the positions, and selling off some of those, and then looking at your winners. NVIDIA, I talked about on the last segment, has just been, like gangbusters this year. Maybe we use some of the losses that you might have from, I don't know, super micro devices or any other type of position you have that's not performed well and might be down. Maybe we sell off some of those losers, get that loss on the books, and then we can go take some of the gains off of the table on some of your higher flying positions. So that way, we're doing it for a net net zero tax implication. That's kind of one of the big things, is making sure that we're trying to be as tax efficient as possible throughout the year with your investments.
So for our listeners right now and our viewers on YouTube, that, I understand it, but a lot of people may not understand it. It's very complicated. Do they have to be involved in any of that? Do I need to be involved in any of that? Or do you guys take care of all that for us? Please say you do. And I know
conceptually, we do take care of all of that for our clients. It is an automatic process that Mike and myself and Catherine that we do inside the portfolio. So most clients don't even really know it's truly happening. There are some clients that want to be more involved than others, where we're actually sitting down and saying, all right, here's this specific stock we're going to sell. Here's the tax implication for doing it this way versus not doing it. So, you can have as much hands-on information as you want, but most people tend to say, you know what, I've hired Mike and Ryan and their team to take care of my financial plan for me. Taking care of my financial plan is not just wondering about making my investments go up or down. It is wondering about the tax implications of everything that they're doing. It's wondering about long-term care, talking about life insurance, talking about estate planning, all those aspects of a financial plan that we are handling for our clients. And it's a topic that, tax loss harvesting is something that we don't really talk about a lot on the radio, because more importantly, one of the big things that people really need to be considerate of is Roth conversions, true tax planning for the future in your retirement. How can we reduce the amount of taxes that you're paying right now? But more importantly, how can we reduce or possibly even eliminate taxes in retirement? And if you're thinking to yourself, these are the types of conversations that I've been wanting to have with my financial advisor. If you've been talking to yourself or talking to your significant other, your friends and family about, I'm really curious about the tax aspect of my financial plan. What can I do to look at taxes in retirement? And you're not getting that information, whether you're working with, one of the big box stores like Fidelity or Morgan Stanley, or even a boutique firm. I encourage you, if you're over age 55 or you're close to retirement or even in retirement, I encourage you to click on the link in the description below and schedule your complimentary consultation to sit down with Mike, myself, Lawrence, Catherine, and our team here at ProStatus, and we will put together your very own retirement plan that talks about tax planning in retirement, how we can help save or even reduce or eliminate taxes in retirement. All you have to do is just click the link in the description below and schedule your complimentary consultation. But also don't forget to subscribe to the YouTube channel.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.